infrastructure plan today. It's got a smaller price tag. It's less than $600 billion. It does still focus on capital improvements to transit systems, roads, and technology. If some version of these proposals is ultimately passed, who stands to gain the most and how can investors benefit? Let's welcome in Kevin Mon. He's the president and CIO of Henyon and Walsh Asset Management. Kevin, this is a great opportunity to talk for a minute about how to separate the signal and the noise here. What is really likely to get passed? Who stands to benefit and where?
Sure. And now we've seen the Republicans' counterproposal to the Democrats' infrastructure spending plan. And Kelly, we know that it differs in terms of amount of spending, the scope of the spending, and ultimately how it's going to be funded. The Democrats' plan calls for over $2 trillion in infrastructure-related spending, whereas the Republicans' plans, as we've just learned, calls for roughly $568 billion. But it's the scope of the spending and the similarities in the scope of the spending that we believe creates investment opportunities, specifically as it relates to upgrading and repairs to our nation's roads, bridges, highways, changes to our electrical grid, expansion of our broadband access. All of that creates potential opportunities for certain sectors of the stock market, those being industrials, materials, energy, utilities, and even communication services.
Well, Kevin, even as we're speaking, there's a headline hitting the wires and hitting the market right now. The Dow's at session lows down about 170 points. President Biden apparently is going to propose a capital gains tax as high as 43.4% for the wealthy. Tell me about that, the market reaction, and what's likely to happen here.
Yeah, and that's the other side of the potential investment equation that sits off of this infrastructure spending bill. As we know, the majority of our infrastructure projects in our country are financed by municipal bonds. It appears as though with this particular infrastructure spending bill that an increase in taxes may come along with it as well, whether that be corporate taxes or even individual taxes. Given that, Kelly, the demand for tax-free income that's associated with municipal bonds should continue to increase. And as that demand increases, that should push prices higher.
I know, ironically, you guys kind of, drool at some of these prospects, but I do wonder, and we're going to talk about this later in the program, as to whether all of these proposals ultimately help or hinder the U.S. economy. And you want, obviously, a productive, efficient economy in order to really maximize even, returns on municipal debt, right? So if we're talking about, and here's a few more headlines from this, California's total capital gain levy approaching 56.7%. What's that going to do to investment?
Yeah, obviously, that's going to cripple investment. And we have to counterbalance the need to put America back to work again, the need to repair our infrastructure in our country with the need to also grow our economy. At the heart of an infrastructure spending bill is putting America back to work again. We've made tremendous strides since the beginning stages of the pandemic when unemployment rose to 14.7%. Right now, Kelly, it's around 6%. And perhaps with the passage of some form of an infrastructure spending bill, we'll get that unemployment rate down to 4.5% by the end of this year. But that can't be done at the detriment of economic growth. So we really have to counterbalance the need to put America back to work again with not taxing too high.
And we're showing, as the markets try to figure out what that will mean for growth, the Dow's down about 250 points right now, the 10-year below 1.6%. So the yield there is sliding. So I guess now we have this interesting push and pull where the way they're going to pay for it might highlight the need to scale back some of the plans. Perhaps, again, it depends on what ultimately, I guess, constituents' appetite is. If something more pared down is what passes, and it's under $1 trillion in the case of the infrastructure bill, where do you see that shaking out? So if it's focused on roads and airports and those kinds of things, what would be your specifically best investments that you'd recommend?
One area that I think both Republicans and Democrats agree upon is the need to expand broadband access and bring internet capabilities all throughout our country. That creates a lot of potential opportunities in communication services. We just came out at SmartChest with our tax advantage growth and income trust, and a couple of the names we like in that area include Verizon and AT&T. And then you look at some of the traditional infrastructure stocks, whether it be Martin Marietta or Caterpillar. They're going to be a large benefactor of whatever the infrastructure spending bill ultimately becomes.